I'll just introduce myself. I'm Keith Tully. I'm the managing partner of Begbies Traynor. It'll be Phil and I who will be speaking today. Malcolm's just here for his good looks, unfortunately, Paul. Yeah, just give you a bit of background on Begbies. We're a national advisory firm. We've got 77 offices. I've not managed to get around all of them yet, but we primarily assist directors of businesses who are in financial difficulty. We're in the same offices as a chamber on Old Hall Street. And as the strategic partners, we've been working really closely together over the last 10 months to try and provide some support and advice to the region's business owners who, quite frankly, have been decimated by the pandemic. So today we've been asked just to provide a short briefing to the members to provide some clarity, reassurance and some up-to-date information, which we believe will be really important in planning for the future. And as Paul said, giving people the best opportunity of coming out of the pandemic with the business in a position where they can continue to trade. Hopefully that when the world resumes from lockdown, you know, they'll be in a position that they'll be in a position of some strength from the planning that they've put in. So my colleague Phil Clark, he'll now provide the briefing, and if there are any questions, you know, you can ask us after the briefing, or if you want to ask us confidentially, you know, we'll be happy to speak to you individually. I just want to say it's been lovely seeing you all. Nice to chat to you in the breakout room, and you know, I want to wish you all a happy new year. And fingers crossed, if this vaccine works, we'll all return to some normality, and businesses will start again, and you know, the economy will get the kickstart that it needs. So yeah, thank you very much for that.
Yeah. Okay. Thanks for the introduction, Keith. And yeah, nice to meet you all. I'm just going to crack straight on. A lot of what we're going to touch upon in the next 10 to 15 minutes, it's what we've been advising business owners to do for the last 6 months, really. But it remains relevant to this day, and probably more so now, given the latest lockdown, which was announced on Monday. So, you know, if anybody does have concern, if business owners are having concerns, then you know what we've been telling people to do. Well, first of all, you need to evaluate what this latest lockdown means, or business owners need to evaluate what this latest lockdown means to them. And if they believe it's going to have some sort of negative effect, then you know they need to, if they haven't done so already, they need to be budgeting and they need to be forecasting. They need to establish where holes are going to lie in the cash flow in the forthcoming months, and well, throughout the whole year, really. Now, we appreciate forecasting is difficult in the best of times, you know, and it's even more so now during the pandemic, but it's vitally important that business owners give it the best shot, even if you think that you know, you're on an even keel now. Just don't know. A lot of the businesses that are doing okay now, it could be their turn in 6 to 12 months for whatever reason. So even as I say, even if you don't believe, or even if business owners don't believe they're going to be affected, it's vitally important that they do some sort of forecasting. And again, well, not again, but with the when forecasting, it's important they apply. You know, they're rather prudent with it. They need the forecast to be as realistic as possible. And sorry, can you move on to the next slide, please? I'm not too sure who's. Yeah, there we go. Yeah. Sorry, the one after that, please. So it's vitally important that debts that aren't yet paid, debts that have been incurred as a result of COVID, they actually take those into account as well. It's what we're calling PAN debt, very imaginative phrase that's been coined at Begbies. It's PAN being short for pandemic, in case you haven't worked it out. So what do we mean by PAN debt? Well, there we go. Yeah, there's a number of different liabilities that come under that. So first of all, there's deferred VAT. So as a lot of business owners will already know, HMRC allowed VAT debts that fell due between March 20 and June 20 to be deferred to March 21, getting confused with the years. They've now allowed, by application, that's now being extended. So if firms believe they won't be able to pay that by March 20, they can actually apply to HMRC and they can pay it over the next 12 months, as long as it's cleared in full by March 22. after deferred V80, there's corporation tax. So again, HMRC have allowed firms to, if people don't know, they've allowed them to pay the corporation tax 12 months after the year end rather than the usual 9. We've then got the government-backed loans. So the first of these were drawn down, the T-bills loans, the first of these were drawn down in April 20. Payments, if firms did draw them down that month, then their payments will commence on April 21. And bounce-back loans, they were first drawn down in May 20. Payments towards those will commence in May 21. And finally, there's restructuring debt as well. So if firms have or are considering making redundancies, then it's important they make provision for any payments they're going to have to make in regards to redundancies. And also, another quite common one is debts relating to leases. If businesses are vacating premises or downsizing, they need to take those into account on how they intend to service those liabilities, include them in the forecasting. Can you move on to the next slide, please? So most business owners now, they're familiar with the support schemes that are on offer. So I'll just touch upon them briefly because there has been some changes and some people may not be aware of them. Obviously, the furlough scheme extended to April 21. That extension came in prior to Christmas, so who knows, it could be extended again given the latest lockdown. Bounce back loans, the deadline for an application for them was originally November 20. Again, prior to Christmas, that extension, well, that was extended to March of this year. Again, could be extended again, who knows. A couple of other little changes with the bounce back loans people might not be aware of. It can now be repaid over 10 years' time rather than the original 6. And also, businesses can apply for a top-up. So, give you an example, if they were entitled to borrow the maximum amount, which was 50,000, and they only decided to take 25,000, they can now apply to the bank for a top-up for the extra 25,000. So that's worth considering, or maybe for some businesses. And then there's the grants. Obviously, there's probably the area where there's been the biggest change over the last few weeks. Well, it only happened this week, really, but mainly for the leisure, retail, hospitality industry, grants are about one-off grants of between 4,000 and 9,000 are available, dependent on the rateable value of the business. Next slide, please. Okay, so other steps that people can take, business owners can take to try and preserve some cash or have a cash injection or cut running costs. Property, leased premises. You know, some businesses may decide that the space they have at the moment is, you know, it's too much, surplus to requirements, or they may need a smaller unit or a smaller office. What we're advising people to do, engage with the landlord as soon as possible. You know, if they have other space, then they might be happy for you to move into that and forego or decide not to pursue for any liabilities in respect to the larger space that's being vacated. Particularly quite common at the moment in the office world, but same again with light industrial. I've seen a few examples in there. Vehicles, if a firm's got a fleet of vehicles or a number of vehicles, try and maximize the usage of as few vehicles as possible. So if a firm's able to dispose of some, it's going to save on the running costs, insurance, maintenance, lease payments potentially. Or if the vehicles are unencumbered, they're owned outright, then obviously it could provide a welcome cash injection into the business. And it's the same with any other assets within the business. If there's any surplus to the requirements, then, you know, business owners really need to be looking at maybe disposing of them, maximising what they bring, what they get for them, and inject those funds into the business. Refinancing as well. Surprising how many businesses you come across where they've got numerous finance agreements, commercial loans, whatever it may be. Look at consolidating those into one longer term commercial loan. It's a lot easier to manage as well, but could make some significant savings on a monthly basis. And then directors' loans. Surprising how many directors are actually owed money by their companies, And there's probably many who are considering lending money to the company at this moment in time to try and make sure it survives. What still surprises me is the amount of times we see where directors haven't secured those funds. So just like when people borrow money off the bank to purchase a property, the bank registers a charge against the house. It's the same in the business world. If a bank's lending money to a company, often they will look to take security, and they will put a charge on the company. Any lender can place a charge on the company, including directors. So if you know of anybody that's thinking of lending the company money, or you may be yourself, then look into securing that money. Effectively, what that means is, should the business run into difficulty in the future, whether it's as a result of COVID or for some other factor, some other reason, then after the costs of any liquidation, the directors should get their money back first. They will stand first in line before any unsecured creditors, such as HMRC or suppliers. Okay, and then finally, any cash that you are able to, or business owners are able to inject into the business, just make sure you're using it wisely. You know, if you haven't already taken steps, limit the amount of cash leaving the business. You know, work with suppliers, work with your creditors. You know, keep them informed. Even small payments, partial payments, hopefully keeps the relationship alive, and obviously gives the business as much chance of survival as possible. Where are we up to? Next slide, please. Okay, so if businesses decide, you know, that those steps that we've already talked about don't suffice, and you need to do something a little bit more drastic, shall we say, then maybe look at some sort of informal debt restructure or formal rescue procedure. So on an informal level, quite a lot of firms are going to be utilising the time to pay arrangement with HMRC. Some of you may be aware of this. It's nothing new. They've been around 10 to 15 years. You used to be able to get, you know, up to 2.5 years with HMRC. They changed the criteria a few years back. It's now like 9 to 12 months, but consensus is that they're going to extend that possibly up to 18 months as a result of COVID. It's something you can do yourselves, but often people employ their accountant to assist them with them. What you're going to need to do is provide a background to the problems, try and demonstrate what steps you've already taken to raise alternative finance, explain why you believe the position of the company is going to change, and the debts are going to be able to be repaid over the next 9 to 12 months. They'll expect to see profit and loss, cash flow forecasts. So again, it's another good reason for doing your forecasting. And they can incorporate all HMRC liabilities. So if a business owes corporation tax, PAYE, and VAT as an example, then it can incorporate all three of those liabilities. If the problem's bigger than HMRC, they're not the only liabilities, then maybe look at some sort of formal rescue package. There's a new procedure's been brought out since COVID called a standalone moratorium. Basically, it's an application to court. The business makes an application to court, and the business is then ring-fenced. It stops any creditors taking any sort of enforcement action, HMRC, suppliers, banks or landlords. It gives them time to come up with some sort of rescue package. It's not that common at this moment in time. A more common procedure is a CBA. A lot of people may well have heard of that. CBAs are being used quite regularly in the retail world over the last 3 to 5 years. It's not just for big boys like your retailers, though. They're a suitable procedure for any size business, as long as the business is viable, and it enables them to write off a proportion of the debt and repay the balance over a period of time, typically 60 months, 5 years. They can be short one-off payments as well. Next slide, please. So what we're also advising people, even if businesses aren't struggling at this moment in time, as I say, the landscape has changed dramatically over the last 12 months at various points. So we're advising people to speak to speak to professionals, speak to advisors who should matters take a turn for the worse, you know what their options are going to be. Big area is human resources at this moment in time. A lot of businesses are having problems with employees who don't want to return to work, who are worried about returning to work. If businesses have made the decision that they're going to need, or they may need to reduce the staff count, should business levels not return again, seek advice early. You know, need to make sure all relevant processes and procedures are followed to make sure there's no sort of claims from disgruntled employees. It's good to have a good lawyer or a couple of lawyers on hand, depending on what you might need them for. There's a lot of landlord and tenant matters that are going to be going via the courts over the next 12 months. Landlords unreasonably trying to take possession, tenants looking to break leases early. Good to have a lawyer on board who can maybe negotiate a way out of that for you, or for business owners. Another reason to have a lawyer on board is litigation matters. You know, if businesses have got debts that they wish to chase as soon as they're able to, because the courts are still closed in that regard, then you know, seek advice now, establish what costs are entailed, monitor the company, that the business that owes you the money, make sure they're you know, they're not under any other make sure they're not got other CCJs against them, winding up petitions. You don't want to be throwing good money after bad. And then speak to finance brokers as well. If you believe you may need to raise capital in the future, establish what's available, you know, commercial loans, asset finance, invoice finance. It's just going to maybe provide some reassurance to business owners should they need to draw on that sort of support. And then finally, there's the Begbies Traynor business assessment, COVID-19 business assessment. If you know of any business owners that are concerned about the future, then we'd be happy to sit down with them. You know, could dramatically increase the chance of survival, be able to provide some useful pointers, guidance, make sure any funds that they do raise are being used in the right manner. Particularly important if they're injecting their own funds into the business. Many examples of where that's being done incorrectly. Only last year, just before COVID, at HMRC, a business owed HMRC 140,000. Director pulled as much money out of the property as he could do. He remortgaged for 80 grand. Gave that to HMRC. 2 weeks later, they were demanding the balance of 60,000. That director came to see myself. A CVA or other rescue procedures weren't appropriate. So we ended up having to put the company into liquidation anyway. Now, he could have put it into liquidation and maybe remortgaged his property, only pulled out 25,000. That would have been enough to buy the business back. As it happened, he was left with he wasn't in a position to buy the business back, unfortunately. So it's things like that we could maybe point out to make sure, as I say, you're using any cash wisely. It'd be a free of charge, confidential, could be held via Zoom. So if you know of anybody, they can have their accountants available as well, or present, I should say. So yeah, that's it really. It crams quite a lot in that short period of time. So yeah, if anyone's got any questions, obviously I've talked about support there. If people need HR support, lawyers, you know, speak to the chamber. I'm sure Laura and Paul would be able to signpost people. And there's a lot of other resource that they've got available as well that might come in useful. So if anyone's got any questions that Keith and I may be able to answer, then yeah, let me know. Thank you.